Hola mi gente and welcome back to the channel. On today's video, let's do a stock update on Uber stock, ticker symbol UBER. Let's dive into the most recent earnings report, which happened today, and this is for quarter 2 of 2021. There's a lot to talk about. This earnings report was not bad, but yet the stock sold off. So is this a buying opportunity in my personal opinion? What am I doing with Uber stock? What happened with the company performance? And why did the stock react the way that it did? Let's cover all of that and more on today's video. All right, the first thing that I want to talk about is the technicals. I want to take a look at the chart real quick for Uber. As you can see in after hours trading following earnings, the stock did sell off. It went from $42 a share to around $37.90. That was the low in the after hours session, and it rebounded a little bit and it ended the day at around $40. If you take a look at the 1 year 1 day chart, you can see that we broke through a support here at around $43, and the next support would be around $38, and that's why I bought the dip at that price. And I will continue to add to this stock long-term over time. I don't like adding to my long-term positions in big chunks. I just dollar cost average and nibble and build myself a strong position. Now hopping on over to the Discord, these are the things that I saw in the most recent earnings report I shared with the community. If you want to join the community, you can do so by joining the Patreon, which will give you access to this Discord server where I alert people whenever I buy or sell anything, and I do due diligence, and we chat and we talk about stocks, cryptos, and everything investing every single day. Now, some of the things that I saw in the quarter 2 earnings report is I wanted to compare this to quarter 1. I wanted to see how mobility was doing quarter over quarter, and I also wanted to see how delivery was doing quarter over quarter. The reason being is that Uber is a two-headed dragon. You have Uber Eats, the delivery side of things, and you have Uber ride sharing, the mobility side of things. And when the economy was doing well, pre-pandemic, mobility was the main business. It was posting positive EBITDA. It was the thing that was driving Uber stock higher. But since the pandemic, deliveries, Uber Eats has really grown. So now you have two separate businesses that basically hedge against each other, because when we reopen, mobility is going to do well, and when we were in lockdowns, delivery, Uber Eats was going to do well. So I wanted to see how fast mobility would rebound and if we would see a decrease in delivery. And I wanted to see quarter over quarter because I don't want to compare it to levels during the midst of the pandemic. I want to see how much it's growing every 3 months and if the trend is still your friend in company performance with mobility and delivery. So if we take a look at gross bookings for quarter 1, we can see that mobility came in at $6.7 billion and delivery came in at $12.46 billion. The total gross bookings in quarter 1 was $19.5 billion. If we take a look at quarter 2, we can see that delivery came in at $12.9 billion. So even though we are reopening, we're pretty much out of a pandemic, delivery is still growing. Now, it's not a huge growth, it's only around 3%, but it's still growing while mobility is bouncing back as well, because as you can see, mobility in this quarter was $8.6 billion in gross bookings, and the total was $21.9 billion in gross bookings. So combined, it's growing, and mobility quarter over quarter, when you compare $8.6 billion to $6.7 billion, that's around a 27% growth in mobility quarter over quarter. The next thing that I wanted to take a look at is EBITDA, because I want Uber to post positive EBITDA by the end of this year or early next year. And guidance from the company following this earnings report is that they are going to post a positive EBITDA in quarter 4 of 2021, and they're going to see significant improvement in quarter 3 of 2021. Now, EBITDA in the quarter 1 of 2021, mobility came in positive. Mobility has been positive on the EBITDA side for a long time. It's the delivery portion of the business that is weighing down EBITDA and eventually profitability. But as we can see that in quarter 1 of 2021, delivery came in at negative $200 million in EBITDA, and the total adjusted EBITDA for quarter 1 2021 came in at negative $359 million. In quarter 2, delivery was an improvement. It was negative 200 in quarter 1. It was negative 161 million in quarter 2. So there's an improvement there. However, mobility decreased. It went to 170 279 in positive EBITDA, where it was 298, even though gross bookings increased. So that was a red flag, but there's a reason why EBITDA was hit in Q2 of 2021 for the mobility side of things. And that's because the take rate for mobility decreased 280 basis points quarter over quarter. And take rate is going to impact profitability on that side of things. So it's going to impact EBITDA. And as you can see, the reason why take rate and EBITDA was impacted in Q2 of 2021 is because of the elevated investments in reviving driver availability, because they are having a hard time finding drivers right now. And they spent a good amount of money getting people to drive for Uber. They've spent a good amount of money in incentives, and that is impacting take rate and EBITDA for Q2 of 2021. However, I believe that this is a short-term thing. That's what they said in the earnings call as well, that this is not going to be a long-term thing, and they actually tapered on their incentives, and they don't think they're going to have to continue with these incentives to get drivers out. We also have unemployment ending in September, federal unemployment, so maybe that kicks people back to work and they start driving for Uber again. But long story short is they have a ton of demand, they just don't have the drivers to fulfill that demand. However, the company is still trending in the right direction. Gross bookings for mobility and delivery are up, which is a huge sign, because I thought personally that delivery would decline because as we reopen, people would go out more. They wouldn't need to get food delivered to their home. They would go out to restaurants. They would eat outside the home. And that is not the case, because we still saw a 3% quarter over quarter growth in delivery. Now that growth next quarter might decline, but the fact now is that it is still increasing and it's holding its own, which is most important. And the reason why it's important that Uber Eats holds its own is because if you look at gross bookings, and if you look at gross bookings for February of 2020 before the pandemic, we were at this level. We have surpassed that. We are at all-time highs for gross bookings because a large amount of that is coming from the delivery side. The mobility side of things still has room to run. So if this delivery stays flat and mobility gets back to pre-pandemic levels, which I don't see why it wouldn't, because people are still going to want to get out, people are still going to call Ubers, it's the way of life. I believe we will get back to pre-pandemic levels on the mobility side of things. And if we keep gross bookings on the delivery side of things pretty much flat, we are going to be much higher in revenue for Uber moving forward. And if we can post a positive EBITDA and continue on that path to profitability, eventually, long term, this stock is going to reap the benefits, because in my personal opinion, I think a lot of investors are holding out in Uber because the story on the street is that this company is not profitable. They spend a bunch of money. They're never going to be profitable, but I think they're wrong. And I think that they can achieve profitability on both the delivery side of things and the mobility side of things like they were in the past. So based on the last earnings report for Uber, I'm still investing in this company. There was nothing in this earnings report that scares me from the stock. There is a lot of risk right now with the Delta variant and travel overall, but this is a company that I think long-term will prosper. It's a company that dominates what they do, and I like the benefits here if you hold Uber long-term. We're trading at around $40. The price target, if you go to tip ranks right now, is $72.48. That's based on 25 analysts, which is a decent amount. 21 of those 25 consider Uber a buy, and the most recent iterations happened 2 months ago at $65 a share and happened last month at $70 a share. I personally think we can get back to $60 a share within the next couple of months, and based that we're at $40 right now and we could dip even lower and buy more shares at a cheaper price, I do like this for an investment or potentially a longer term swing, but I'm not a huge fan of swinging stocks right now in the stock market. I definitely recommend that you do your due diligence and enter this as a long-term investment. And if things work out and you get to $60 and you don't want to hold it anymore and sell it, then that's fine. But just enter with the intent to hold it long term. I say that because I want you to do your due diligence. I don't want you to enter this stock as a trade, because when you enter in a trade, you look at technicals, you do a real quick analysis of the fundamentals. You don't really dive into the company. I want you to dive into the company, especially in this market climate, which is super finicky, and any trades that you hold could drop a ton in after hours, pre-market, and you could be left holding a bag. And I don't want you to hold a bag in a stock that you do not believe in. But with all that being said, that wraps it up for this video. I thank you so much for your time. If you want to join the community, a link to the Patreon's down below. It gives you access to that Discord server where I post whenever I buy or sell anything, and we talk about stocks and cryptos every single day. I'll catch you on the flip side. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.